welcome back to the channel. My name is Brad. This is the Firefighter's Financial Toolbox. Today we're going to do a deep dive into the ARK Invest ARK Innovation ETF. Now, if you guys have not been paying attention, there's this lady out there named Cathie Wood who is almost like the messiah of tech investing over the last year or so. Her ARK Invest ETFs have become super popular. Today we're going to talk about the first one. It's ticker symbol ARKK. As I said, the ARK Innovation ETF. So, well, first of all, I would say, why would you want to invest in this? It's focused on innovation that is key to growth. It's built on the cornerstone investments that present the best risk-reward opportunities from ARK's innovation-based themes. If we take a look at the fund description and objective, ARK defines disruptive innovation as the introduction of a technologically enabled new product or service that potentially changes the way the world works. Companies within ARKK include those that rely on or benefit from the development of new products or services, technological improvements, and advancements in scientific research relating to the areas of DNA, genomic revolution, industrial innovation in energy, automation, and manufacturing, industrial innovation, the increased use of shared technology, infrastructure and service, next generation internet, and technologies that makes financial services more efficient, fintech innovation. ARK is an actively managed ETF that seeks long-term growth of capital by investing under normal circumstances at least 65% of its assets in domestic and foreign equity securities of companies that are relevant to the fund's investment theme of disruptive innovation. So what does disruptive innovation mean? Basically, these are things that she feels are going to change the world. All right? So you guys know that I am primarily an index investor. Now, I'm not saying that's the best way. I'm saying it's my way. And the reason I like index investing is because indexes cost less. The only thing I can control in the stock market is how much I pay for an investment, right? So let's take a look at the fund breakdown for ARKK. We see that it's an active equity ETF, right? This is actively managed. Cathie changes the investments as she feels it's going to make money. Okay? If we drop down, it's been around since October of 2014. It has about $17.68 billion in assets under management, you guys. That's a lot. That's a pretty big fund. And as you know, it's grown exponentially throughout 2020 and the first part of 2021. Here's the part I don't like. Expense ratio, 0.75%. So you guys, if you make 2%, you really only make 1.25% because you're paying 0.75% back annually as an expense ratio. That is expensive. It says it typically has between 35 and 55 holdings, and the average weighted market cap is $122 billion. These are pretty big companies. All right, let's take a look at how the breakdown works for this fund. First of all, as we said, market capitalization. About 18.3% is companies that are more than $100 billion. About 46.5% is companies between 10 and 100 billion. So a lot of big companies. 32.4% is between 2 and 10 billion, so mid caps, right? And about 2.6% is in small caps and less 0.1% in micro caps, you guys. So you do have some diversification across capitalization. Let's take a look at the sector breakdown next. Healthcare is about 31.5%. Information technology is 29%, which makes sense, right? This is a technology thing. Communication services is just under 21%. Consumer discretionary is 10.6%. Financials at 3.6%. Industrials at 2.8%. Real estate makes up 1.5%. And there's about 1.1% of just other, not classified. If we look at the technology breakdown, e-commerce makes up 12%. Digital media, 9.7%. Cloud computing, 9.4%. Gene therapy, 8.9%. Big data and machine learning, I read that to be AI, right? 7.5%. Mobile, 7.3%. 3D printing, 6%. Internet of Things, 5.9%. So a lot of the bigger stuff is in your new technologies that are going to change things, right? Geographic breakdown. 79.7% is in the North America. About a little over 10% in Western Europe, 9.4% in Asia and the Pacific Rim, and less than 1% in Africa and the Middle East. Moving on to the top 10 holdings. The biggest holding at 10.68%, you guys, Tesla. As you know, Kathy Woods is a big Tesla fan. She's a big Tesla bull. She's the one that claims it might go to $4,000 a share. Is it going to happen? I don't know. Lately it's been down a little bit, but who knows. The second holding, Square Inc. at 6.29%. You got Teladoc Health at 6.17%. Roku makes up 5.45% of this. Zillow Group, so people that appraise your house, 3.61%. Baidu Inc., 3.35%. I'm not familiar with that. Zoom. Zoom worked itself into this, and last year it made a lot of money, right? Because we were all home. That makes up 3.23%. Shopify is about 3.22%. Spotify, so music on the web, 3.1%, and CRISPR Therapeutics makes up the last at 2.89%. You guys, as I said, I think the ideology behind these are very sound. I think for a tech play, it's a great idea. This is an ETF that invests in innovative things. For me, I think a lot of these companies you get in the S&P 500, not in the same kind of weightings, obviously. But if we take a look at how ARKK has performed over the last year, we can see that it was skyrocketing. It started at about $45 a share, and it's currently at probably about $110 a share. I don't know exactly today, but you can see in the last month it has dropped off quite a bit. If we compare that to a year in the S&P 500, now granted everything's down a little bit the last couple weeks, but you can see in the S&P 500 we've had more of a direct line going up because we're sharing the wealth. Instead of having 35 to 50 companies, we have 500 companies. You guys, again, I'm not telling you whether or not you should invest in this. I just give you the information about the ETF. As I said, I think it's a very sound ideology for investing if you are wanting a tech play. If you feel like you need to gear your investments more towards technology, it's certainly a good option, albeit an expensive option at 0.75% annually in fees. The other thing to think about is this fund got popular and has been run up in price because it's grown from a very small ETF to a very large ETF over the last year. A lot of those people that got in early are big winners. The people that get in late tend to not get as big of results. Just keep that in mind if you're considering this. As I said, this is more of a speculative play in my book. I don't like speculation. I like investing in solid companies that I believe in. But everybody is their own investor, and everybody's thought process on how they invest should be different, and I think that's a great thing. Anyway, you guys, I hope you got something out of this. If you are interested in ARKK, do me a favor. Let me know in the comments if you have invested in this or you're thinking about it, and give me a little spiel about why. What your thoughts are, why you invested in it, these kinds of things. As a community, I think sometimes even the comments help. As I said, I looked into this because I had a viewer ask about it, and I was like, you know what, let's do a deep dive and see what it is. And I'm glad I did, because I know more about it now than I did. So, as a community, we learn together. All right, you guys, I hope you got something out of this. If you did, do me a favor. Drop me that like. It really gets the video out to more people. If you're not already subscribed, go ahead and hit that red button, ring the bell. You'll get notified every time I make a video. All right, thanks.